if there's anyone who believes that uh, any government can stimulate its economy out of debt, I'll feel like theoretically say it's possible, but I don't believe it really happens. I have never seen it happening. Where government can stimulate itself out of debt, that's funny. When I say stimulate, that means it prints more money or makes money out of thin air to pay off its debt, one or the other. Well, with a market cap of 7.2 trillion US dollars, that's almost like a 0.3% of the market cap of the Japanese bonds. However, that's a big indicator to the rest of the economy, especially the US economy, because Japan is holding almost 1.2 trillion US dollars of US treasuries. And it's making its bond market to be more attractive to domestic buyers, one or the other. Because if Japan is holding almost 1.2 trillion US dollars in US treasuries, and those are foreign holdings, one or the other, and it's the biggest today right now, and it's making its home bond market, let's say, the 30-year yield today is at 4.2%. The 30-year yield will rose up from 3.71 to 4%. The 10-year yield rose up from 2.2% to 2.9%. If you think those are small numbers, for context, for those who don't understand what's taking place, you should try to understand that the government is trying to make its borrowing ideology to lenders, me and you, who try to buy bonds, to be more attractive than the US bonds. You should try to understand that borrowing costs for governments are going to be rising high, and that's the same thing for Japan. The more government put costs for borrowing, getting high interest rates, keeping them getting high and high. We just saw the interest rates for Japan last year. By the end of December, they rose from 0.25% to 0.75%. The yen current trade is dying one or the other. We should try to understand this. These are numbers that we should try to understand that this is how Japan could kill the US economy, one or the other. For those who understand what's taking place, that this indicates one or two things. Well, the Prime Minister Sanaichi came up with a proposal in the Parliament of Japan, one or the other. That's how I would indicate it, saying that they should stop taxing the sales on groceries, one or the other, to make food affordable, to help the economy stimulate, one or the other. But we're speaking of a country that's having almost a 250% of ratio to its debt, one or the other. Well, however, whatever she's trying to implement is really good for the economy, actually for the Japanese citizens, one or the other. However, the way she's bringing out the idea, it doesn't have the actual formula of how to implement it, one or the other. The consequences are crucial, one or the other. That's why we saw a sell-off of 280 million US dollars of the Japanese bonds in one or the other. That just skyrocketed. That's one of the biggest number in decades. We should try to understand that this isn't just another simulation, one or the other. Today, governments are standing on stimulus. When I say stimulus, they like injecting money into the economy for the short term being, one or the other. They try their level best to keep the economy moving, because we have to understand that Japan has been fighting deflation. Today is fighting inflation. Inflation with 3%. And if the ideologies the Prime Minister is bringing into Japan, this ideology, you try to understand that they are kind of inflation. Because one of the main reasons why Japan is raising interest rates towards the growing inflation, because the inflation today is at around 3%. And that's one of the major reasons why it's faced such kind of a high inflation. Well, we know the biggest export of inflation today, well, that's the US, because the US is one of the biggest exports. We have to accept it, like it or not. That's inflation, because it can print money, and it has the world currency, and one or the other, the trade currency, known as the petrodollar, and one or the other, because it works as a mediator between currencies. That's why today we are seeing the growth of the BRICS. The BRICS alliance are coming in, trying to find narratives, because the biggest export the US is having today is inflation. We have to be, like it or not, it's inflation. We should try to understand that such a narrative means one or two things. What does this mean for the US economy as we go further? To understand what goes further, let me just show you the impact, the sell-off that impacted for the US treasuries. Let's break it down. Well, the 10-year yield on the US treasuries, rose from 4.2% to 3.0%. to 4.30% in one or the other. The 30-year yield rose from 4.45% to 5%. When you see yields skyrocketing, it indicates one or two things. They are sell-offs, okay? And just of this incident, it's likely and said by analysts believe that at least 130 to 140 billion US dollars in US treasuries are likely to be sold off to be taken back to Japan to buy the Japanese bond because they are having a 4%, the 30-year yields having a 4% yield in one or the other. If you're thinking those are small numbers, we're speaking of Japan as holding over the biggest US treasuries, and it's finding itself difficulty to stimulate the economy on the other. Its borrowing costs are rising, okay? Itself is trying to fight inflation. It's killing the yen trade, okay? These are all numbers that you try to understand that indicate one or two things. There's what they call the how to forget how to grow economy. And this all began since 2020. And as I speak of for the last 5 years, trust me or not, these economies have not been growing globally in one or the other. Because what we count in GDP number or GDP growth, there's also what we call additional stimulus. That's the payment we have to do in the coming years. That's a debt we have to pay in the coming years, one or the other. Whenever they say GDP growth of 2% or 3%, that's not the actual growth in actual sense. Every growth you see in any nation today has what they call stimulus. When you see any government saying there's growth, trust me or not, there's stimulus. Stimulus is the biggest drug that governments are feeding on today. Today governments are no longer feeding on taxes as they used to be, or maybe taxes, and today governments are dragged into a lot of things. If you look at the US economy alone, however, back to Japan, we should try to understand that one or two things that we should try to understand that this scenario means one or two things. The governments are not really doing that great. And the worst part, they're not looking at finding a solution or solving their debts one or the other. However, they are trying to find ways of making stimulus to the economy. If the Bank of Japan could look on ways how to tackle down its debt, you get the point. Same thing to the US economy. Today, Trump is fighting the war with the debit creditors one or the other, the war on credit cards, but they're not looking at the US debt. Japan is not looking at the Japanese debt. All these governments are never looking at the debt they are facing today. They're always looking for best ways because we know how politicians like to spend, and they have to spend. They don't like looking at things that are going to make them look bad the rest of the economy. Then I believe in this world, there's no politicians who are ready to look at cancelling the government spending, cutting the government expansion, or the expanding one or the other. All governments are just looking on one or the other, just stimulating the economy for the short time. Because whenever you stimulate the economy does well in the short time, and you can show the people how well you have been doing for the government. Yeah, I've made prices to go down, or I have created kind of money in the system or money in the economy. But in actual sense, where you got this money from has to be paid back. And that's what they call promised inflation one or the other, or future inflation that we have to pay for. Because we should try to understand that today the Bank of Japan is facing two things. It's trying to stimulate the economy because the economy is showing slow growth. It's trying to raise interest rates so that it fights inflation. It's in the middle of two things that it cannot really control one or the other. Well, thank you for watching. See you in the next one. We hope for the better. But if governments don't crack down for their debt they are facing today, they don't crack down finding a solution how to decrease their spending, well, hope for the worst. Otherwise, thank you for watching.